when you're investing in emerging markets, we do believe just being aware of what are the big top-down macro trends, and I think as importantly, what are going to be the long-term thematic drivers? Because at the end of the day, while there's a lot of countries, our belief is that you should really be focused on a handful of big countries and also a handful of big thematics. They'll be the big drivers of this market going forward. So this overframe of looking at things from a top-down perspectives makes us understand in terms of where the risks are at this time. And the other thing to note as well is that we do been focusing on a lot of these concerns that surround what's happening with the environmental issues, clearly what's been happening with COVID that's going on, social impact that's coming through as a part of this, and obviously governance has always been a big factor.
So the macro in emerging markets is important in understanding where you don't want to lose money. So it's about choosing the markets. So 10 years back, macro was much more relevant because there were different moving parts in the economies. But in last 10 years, a lot of emerging market economies have fallen off. So South Africa, Mexico, Russia, even Brazil has had volatile times. So then these were vulnerable markets. Our view is that one has to focus on macro benign countries as that is where the opportunities are. And so like the portfolio is focused on large population size countries, China, India, Indonesia, Brazil. And macro is like in some of these countries is benign or it doesn't matter that much. It's not highly volatile except Brazil. But macro is relevant, so you avoid blowups. Now, in smaller markets, in emerging markets, a lot of these countries, you don't have too many investable companies. Like a country like Mexico has like 10 investable companies. And that too, growth has slowed down a lot. So there is not much earning growth happening in that economy. But if you look at India and China, and Brazil, the set of investable companies is huge. And these are, because of history, the sense of entrepreneurship in these economies has always been very strong. That if you look at this slide as data from last 5 years, so if you took all the companies in each of these markets in the end of 2014, and you see which countries have the maximum number of companies that have compounded at more than 15% in US dollar terms, you will find that India and China outshine. And this is true not only for last 5 years and not only for $1 billion plus market cap companies for which the data is shown. It's true across the market cap spectrum and across time periods. You run this data 5, 10, 15 years, the results don't change.
If you're able to sustain or sit through some of the volatility, the returns can be quite amazing. This is looking at since 1998 to 2019. So these are quite a long, that's 22 years of history. So if you were able to put money in, $10,000 over that period, let it compound, you would have done, made more than $250,000 US. Now the problem is, I think market timing, people want to get in, people want to get out, but that's going to be very difficult. So if you look at that slide, so if you miss out of those 264 months in those 22-year periods, so if you only miss 10 months, that's less than 4% of number of months, you don't make 50% less money, you actually make 75% less money. That's a big difference.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。